Bitcoin is currently breaking down from a 4-week-long major uptrending support. How low could Bitcoin go, or will we see a fake out? Let's go ahead and jump in. Okay guys, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic day today. In today's video, we're going to be discussing the short-term price action, the current potential breakdown of the uptrending major support line, and of course, what exactly we think is going to occur next. We'll also go over the market data, the macro and high time frame charts, and discuss the developing news surrounding CZ and Binance. Before we get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical and structural information, and the relevant economic news. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you're interested in, join us on Telegram. It is the third link down below. You will get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency with Bitcoin and the relevant economic news. If you are interested in trading, join our VIP group. We post trading setups with exact entries, exact targets, exact stop losses, trade justification, exclusive analysis, and so much more. If you're interested in getting access to our VIP group, including our group chats, our general chat, look at the CZ memes, our trading chart and education chat, our trade setup chat, our news chat, our help chat, and our daily video chat. If you're interested in getting access to all of that with over 600 members, contact me in the pinned comment for more information. Let's go ahead and dive in, guys. So as we can see, Bitcoin has seen an official breakdown. We've actually got that 4-hour close now underneath this uptrending support line. We're going to discuss this in a lot of detail today. If you've been following the channel and watching, you would know what this means on a preliminary level. Before we get into the charts, let's start on the market data. As of 24-hour volume, we are seeing a 35.26% increase in that, bringing us to a total of 134 billion. Looking at 24-hour liquidations, we are up 104.08%, sitting at a total of 228 million, a whopping amount of liquidations. It's an absolutely huge number of liquidations for a 24-hour period. Looking at that volatility index, we can see again the 30 and the 60 saw a little bit of a bump, but are plateauing at these levels, which again, this higher volatility is decent to see. Of those liquidations, a massive 192 million came from long positions and 39 came from short positions. Moving over to the DXY, we can see over here the DXY has retested these low points exactly as we did expect. The DXY will remain in a downtrend while it remains underneath this downtrending diagonal trend line, this black trend line, and this parabolic curve, which is that blue trend line. So expecting a degree of support over here for the DXY. The DXY does break below this green box. We are then expecting a correction lower to this red zone. Until then, support is support until it is not, and we are expecting a bounce. Moving over to the stock market, the S&P 500 is looking strong still. We do want to see a breakout of this diagonal trend line. A break above this level will result in a continuation to retest these high points. This is potentially a cup and handle formation developing over here. However, again, that is quite speculative as it occurs on a higher time frame. We are very much still watching this diagonal trend line, as a break above this level is likely will likely result in a continuation upwards. If we take a look at the short-term price action, we can see we are in an overall short-term uptrend as we broke above this downtrending resistance. If we look at the current horizontal resistance represented by the red level, we are technically short-term bullish while we remain above. A break below this level will result in a continuation back downwards. So overall, looking pretty healthy. Looking at the Dow Jones, a very similar chart developing over here. We can see our respective downtrending resistance over here. If we break above that level, expecting a continuation upwards to our highs, and of course, if we lose this local area of support, we'll be expecting a continuation toward these lows. That about wraps up the S&P 500 and Dow Jones and DXY. Let's go ahead and jump into the news and then Bitcoin. So as we know, and as you probably heard circulating all over Twitter, Binance is being ordered to pay $4.3 billion by the Department of Justice in a criminal case in the US. And that's not just Binance. CZ himself has been ordered to pay a pretty large fee of $50 million, a $50 million fine, as he actually pleaded guilty in multiple criminal charges against himself and, of course, his company. As a result, he has stepped down as CEO from Binance. And we've seen a pretty negative reaction in the market due to this news, which has been about a 4.5% correction for Bitcoin over the last 4 hours. It's going to be very interesting to see how this story develops, and we'll be discussing a little bit more later in today's video in regards to what potential impact this could have on the broader markets. But let's go ahead and jump into Bitcoin. But before we do, BingX and Bitget. I wanted to briefly interrupt today's video to discuss the two exchanges we use on this channel, Bitget and BingX. So which exchange should you sign up to? If you look to the right hand side of the screen, you're going to see the list of differences in relation to KYC requirements and the countries these exchanges offer services to. The first link down below being the Bitget link, and the second link down below being the BingX link. No matter which link you sign up to, you're going to get up to 15% discounts on your trading fees, up to $5,000 in trading rewards, and of course, you'll get access to every single MegaWhale exclusive bonus campaign we run on these exchanges. Alongside that, Bitget and BingX are incredibly similar. They are both ranked top 10 in terms of trading volume. They both have extensive liquidity pools and market pairs offering up to 125x leverage. And most importantly, they both offer protection funds for their users to protect you against any third-party hacks. So get started now and support the channel by clicking the links below. Thanks for listening. Okay guys, so back into Bitcoin, we're going to be discussing the macro, the short term, the weekly, the monthly, the bull market, the bear market, our next expected moves, our high time frame levels, absolutely everything you need to understand to navigate the current price action and position yourself effectively. So let's discuss the short-term charts. As you know, we have been taking a look at this particular major uptrending support now for a very, very long time. In fact, this uptrending support developed all the way back on the 3rd of November, and we have held above this level for 1, for 2, for 3, for 4, for 5 retests, actually seeing a breakdown now on the 22nd of November, which is today, on that 6th retest. The question is, will this breakdown result in a high time frame correction, or will it just be a healthy short-term correction before a continuation upwards? So before we answer that, we need to identify the most important levels, not only on the short-term chart, but of course the high time frame chart, to give you context to what occurs next. So first and foremost, guys, we have gone ahead and annotated the important levels. We have, of course, our major uptrending support. That is reflected or represented by the uptrending diagonal trend line. You can see Bitcoin is currently broken down through that level. Number 2, we have got our bearish trigger point. This is going to be the price point of 33,350. As you can see, the bearish trigger point represents the local low or the first test of the uptrend. This is point number 1. Point number 1 of the uptrending diagonal support we have been above, which is our major uptrend. Furthermore, looking to the right hand side, we can see it constitutes the beginning, okay? The beginning of the VRPV gap, which takes us down to around 30,600. We can see the beginning of the VRPV gap starts with the price point of 33.350, which is going to be the bearish trigger point. Moving on downwards, we do have the VRPV gap spanning from the dash trend line to the solid trend line being the local top point at 30,642, which is going to be the high of that fake ETF news that did get released. Of course, this is going to be the lower bearish target. If we do lose a bullish trigger, we would expect the price to fill that VRPV gap and continue down to that local top point, liquidating everyone within this range and even giving us a nice little scam wick below that major 32K support. Looking toward the upside, above us, we have some very important levels. We now have the POC point, which is the point of control, the area within this entire visible range of the greatest amount of historical trading volume, and thus potential resistance. So we do have a POC resistance, which is going to be marked out by this red line. Moving on upwards, we have a very important bullish trigger. The bullish trigger is sitting at 38,000. Again, you can see the upper portion of that VRPV. Again, a break above this level is going to be a trigger, meaning the kickoff point for a continuation to retest the 40k resistance, which is going to be the bullish breakout target, meaning a break above the dollar trend line is likely going to send the prices higher. So let's go to the high time frame chart, discuss the key levels, and then come back and discuss the likely moves. So looking at the high time frame chart, the 32 level and the 40k level are those significant points. You can see this is going to be our 38. Okay, our 38 to our 40k range. Our 38 to our 40k range is going to be the distance between the dotted trend line and the solid trend line. This is an area of overall resistance. Awesome. Moving down, we can see the 30,000. Okay, sorry, my bad. The 32,000, okay, the 32,000 to the 30,600 area, which is going to be the local high point on the 3-day chart of this point, which is the 30,600 and the 32,000, is going to be respectively the distance between this dotted trend line and this solid trend line, which is support. So what are we building over here? We're building a narrative. We're seeing we have a huge chunk of resistance, a huge chunk of support. We have our trigger points acting as the entrances into those support and resistances for a directional continuation to a resistance high or the support low. And then we have the cluster of consolidation that is occurring between that support and resistance, which is facilitating, again, either a break upwards and continuation on a macro scale or a correction into support. So a lot is happening over here, guys. And again, this price action is actually some of the most interesting price action we've seen for a long time, because not only are we seeing it play out on a macro scale at some very important high time frame levels, but we are actually seeing these levels being respected to a T on a high time frame chart. We can see just how these support and resistance levels are playing out almost perfectly on this chart, which is phenomenal to see. So let's discuss the short term, and then we'll go to the high time frame. Short-term narratives, short-term directions, short-term possibilities. We talked about briefly the trigger points. We know if we break below this point, we are very likely to see a continuation downwards, guys. We're very likely to see a continuation downwards to our 32k to our 30.6k resistance range, okay? That is going to be our trigger point. If we break upwards, we are very likely to see a continuation upwards to 40k, which is going to be our resistance point. Perfect. However, guys, everything in trading comes down to a set of probabilities. Whilst we remain underneath, okay, the uptrend, or if you want to flip the chart to change your bias, whilst we are broken out of the downtrend, the probabilities for a continuation is greater than the probabilities for a correction, okay? Only if the price reclaims this uptrending support line and the POC level, will we potentially see a continuation back upwards? Now, that is definitely a possibility. Do not write that off, particularly because this correction has massively been influenced by the recent news that we have seen in the market. So when we see price move based on news, we have to be a little bit more cautious about taking it at face value than as we would normally see. So be a little bit more cautious, meaning if you're going to take shorts here, which you probably, looking at the chart, would not be stupid to do. I'm not going to tell you what to do. You have to make up your own decisions, of course. But according to the chart, we do have a greater probability of a correction than a continuation upwards while we remain underneath this trend line, okay? And if I were to take shorts, I would keep my stop losses relatively tight in case this does actually fake out, just like we kind of saw over here, and a continuation upwards. So, short-term price action, guys. Number one, expecting a continuation downwards into our cluster of support, which is going to be our VRPV. We can actually see from this range, which is our gap, we'll filled that gap over here. We can see, we'll actually, you know what, we'll draw this out a little bit clearer for you guys, just so you can really go ahead and take a look. We have our VRPV gap right over here. We are in that gap. We are in this area of potential support. Again, we are underneath this downtrend, therefore we are in a developing downtrend. We can see the next chunk of support is going to be within this higher time frame range, and we would expect a continuation into this level, okay, if this local low point is lost. We do have a directional move occurring here on the VRPV. We can see we have increasing support as the price moves down. I would not expect this move to be a volatile or a quick move. If it occurs, I would expect it to be slow and drawn out. The volatile and quick move occurs in these vectors, okay, in these volatility gaps. Perfect. Okay, moving upwards, guys. If we break above this trend line and reclaim the POC, we are likely to continue upwards, and then we come back into the period of consolidation. Again, we have this consolidation formula over here. We are going to be bouncing between before we get directional continuation up or down. So watch this candle, watch what is happening, but most importantly, zoom out and understand we have resistance here, we have support here, we have consolidation between our triggers, okay? And these triggers here are the triggers for directional moves. They are the most important levels you should be watching. Until then, we are very much in consolidation. We are very much in a macro uptrend, okay? We're above 32K, and yeah, we are definitely showing signs of exhaustion. We are 110% showing signs of exhaustion. However, guys, we have to be aware that even though we are showing signs of exhaustion, we are still in a high time frame uptrend, and any correction that occurs from 38 to 40, like we've been saying, should be considered a healthy correction provided the price action remains above 32K. So this kind of leads me into the next topic, and it's a question I got from one of my VIP members, and he said, Whale, now that, Binance is under, the line of fire, now that CZ is potentially being arrested for speculation, of course, but at least paying a $50 million fine, stepping down, and, CZ was kind of like that figure, that public figure for cryptocurrency. How could this potentially change the probabilities for a retest of key high time frame levels? To answer that the most simple way, this way you're looking at it should not be the way you should look at it. It is too speculative. Focus on what the charts are telling you. The charts are the cheat code, okay? We cannot expect a retest, okay, for example, of 24.4 until we lose 32, until we lose 28.6. Therefore, we have two major levels of support. The probability of retesting 28.4 from 35 is lower than the probability of a breakout of 40 than a retest at this point, okay? We have more support below us, then we have resistance above us. So we still have to look at it from the key levels, right? If we lose 32K, then we have seen a loss and deviation above a major monthly trigger point. That is something we haven't seen before. That will result in a continuation downwards and potential retest of 28.6. However, yes, we are seeing a resistance. We are seeing 38K to 40 act as a resistance, which is we should. We should see this level act as a resistance. If we look at the VRPV, we can see a very, very clear bump over here at 38 to 40. We can see this area as a resistance. We can see the area between 38 to 32 has filled up. And by that, I mean, if we take a look at the VRPV back over here, we can see a massive, massive gap. It should fill up over here in a second. It looks like it hasn't really done it very well. Let's go ahead and turn it on and off again. Sometimes it glitches out. Okay, it's not working. When you rewind, sometimes it does show, sometimes it doesn't. However, this area here has been filled. Okay, to put it simply, this area here has been filled. If we look back at that place, 4 or 5 weeks ago, it was a massive gap in the VRPV. Okay, it has been filled. The 38 to 40 is an area of resistance. The next area of resistance is going to be 48K. We can see the VRPV drops off significantly to around 46 to 48. So bringing it back to that point, 38 to 40 was always going to be an area of resistance. The biggest question is, will the rejection from this point be strong enough to push us underneath 32K, or is it going to be healthy? Because all this exhaustion we're seeing here, okay, and on the daily, the RSI breakdown, okay, we'll show you in 1 second, the RSI breakdown over here, of course it's not a good sign. Of course it's showing weakness, but put simply, it is still healthy. It is healthy weakness. We are still in an uptrend. Do not expect the price to drop to 10K or 12K until we start clearing these levels. Not that I think it's going to go there anyway. My point is, do not be overly bearish when we are in a macro uptrend still. A small 4% correction from an area of major resistance, which we always expected a rejection from, does not change the probabilities of retests of these lower points. So when you're looking at news events, don't overinflate it. Just look at it from face value. Yes, this is bad. Yes, it's caused a short-term correction, but the high time frame trigger points, the high time frame chart, the high time frame levels are still going to be the important levels we're watching out for. Okay, it doesn't mean we're likely to drop below 12K now because CZ got wrecked. Doesn't mean anything. Okay, so pay attention to charts. Be objective with what the charts are suggesting. So again, guys, coming back to the short term, really quick summary. Watch your key levels, watch your trigger points, watch your targets, watch your uptrend, watch your gaps, okay? Watch the key levels. Understand, while we are in a short-term downtrend now, developing a downtrend, the probability for a continuation lower is greater than a probability for a continuation upwards while we remain underneath the major uptrending support line. If we get back above here and this is validated as deviation, well then the uptrend becomes more favorable in comparison to the downtrend, okay? Moving over to the high time frame chart, if we break above 40K, we are expecting to see a continuation upwards. Until then, yes, we are starting to see exhaustion. We've been seeing exhaustion for the last few days over here. We're seeing again bearish divergences. We're seeing again Marcus over B prints. We're seeing momentum shifts and breakdowns on the daily, which is indicative of potential short rejections incoming. Those rejections are expected to happen, but most importantly, expected to be healthy if they do occur, provided the price is able to remain a monthly candle above 32K. If we close a monthly candle below 32K, that is when Bitcoin enters this cluster of consolidation again, and this whole move upwards is going to be deemed as a deviation from the range. That, by all means, is going to be massively bearish, okay? So let's keep it objective, let's keep it real, let's focus on the charts, let's go forward from this and smash it. Have a great day, guys, and I'll catch you in the next one tomorrow. Cheers.